Hello class, I wanted to talk to you about the financial statements. There's four primary financial statements: the income statement, the statement of retained earnings, the balance sheet, and the statement of cash flows. So I wanted to look at what is on each statement and then also talk about how they are related to one another. So let's look at the income statement first, which is at the top. I want you to notice the heading. So on the heading, first on all of the statements, we put the company name. It can be in all caps, but it doesn't have to. We put the name of the statement, and then we put the date. The income statement, the statement of retained earnings, and the statement of cash flows all cover a period of time. So those dates are going to be something like for the month ended, for the year ended, for the quarter ended. Those dates are always going to cover a period of time. So on our income statement, we have revenue and expenses. You start with the revenue, you subtract the expenses to get the net income. You have to do the income statement first. And the reason that you have to do the income statement first is because net income is required on the statement of retained earnings. So the statement of retained earnings is second. The backbone for the statement of retained earnings is beginning retained earnings plus net income minus dividends gives you your ending retained earnings. So the only way you can get retained earnings is from profitably operating the company, because retained earnings is tied to your income. Notice the date on this statement is also a period of time. So for the month ended, for the quarter ended. So we started with retained earnings. This is also one of the few statements where if you start with a zero balance, you actually show that. And the reason that you show that on the statement of retained earnings is because a zero balance for beginning retained earnings says, hey, this is the first period that we've operated. So we have our beginning retained earnings plus net income. That number comes from the income statement, minus the dividends gives you your ending retained earnings. You have to complete the statement of retained earnings second, because retained earnings has to go on the balance sheet. So as we move down to the balance sheet, you see that the balance sheet starts with on the heading, starts with the company name, and then the name of the balance sheet. But then look at the date. The date on the balance sheet is a specific date and time. The balance sheet is the only financial statement that is a specific date and time. Now, you don't have to memorize that. It's going to be on the quiz, but you don't have to memorize it because you can think through it logically. If I asked you, what was your cash balance for the month of July? You'd be saying, what day? Or if I said, how much do you owe on something for the month of July? You'd be asking me, well, which day? So the balance sheet is always a specific point in time. Sometimes we call it a snapshot. And the reason is because look at our assets, cash. If I ask you how much cash you have, it has to be at a specific point in time, because the day before and the day after might be different, probably will be different. So cash, so on your balance sheet, you have assets and then liabilities and equity. Remember, the balance sheet is the accounting equation. So we have assets, and notice that they equal 40,400, and liabilities plus equity equals the same amount. All right, so retained earnings goes in the equity section. We have common stock, and then we have retained earnings, and retained earnings has to come from our statement of retained earnings. Our fourth statement is the statement of cash flows. Now, this statement doesn't actually need a number from any other statement. This is on the quiz. You do not have to do the cash flow statement to get the cash balance. All this is saying is that when you are done with the cash flow statement, your ending cash balance should be the same as the cash balance on your balance sheet. If it isn't, you have an error somewhere, because the cash balance at December 31st, whether it's on the balance sheet or on the statement of cash flows, should be the same number. All right, now let's look at the statement of cash flows and see what it tells us. And here's the really neat thing about this. Next week, we're covering Chapter 3 and Chapter 12, but I'm going to tell you everything you need to know about the statement of cash flows right now. So everything about how to do the statement of cash flows in Chapter 12, you don't have to know. When we look at the statement of cash flows, what we're looking at is where are we getting our cash from and where are we spending our cash? And the reason that we need a statement of cash flows is because the income statement is based on accrual accounting, which means that we recognize revenue when it's earned, even if we haven't received the cash yet, and we recognize expenses when they are incurred, even if we haven't paid the cash out. Now, the problem with that is that cash itself is the lifeblood of any business. So knowing how much cash we have and where it's going is very important, and we can't see that on the income statement. So there's 3 categories on the statement of cash flows. The first category is cash flows from operating activities. Under this section is everything that has to do with operating the business. That's where the cash paid to employees for payroll goes, the cash paid to vendors for supplies, the cash received from customers. That's what goes under the operating section. At the end, we have either net cash used by or net cash provided by. This statement shows that we ended up with a surplus of $1,000 cash from operating activities. The second section is cash flows from investing activities. Now, on one hand, this is exactly what it sounds like. If the company has made an investment, we're going to put the cash part there. But what you're going to predominantly see in this section is cash that is paid out or from purchasing fixed assets like plant, property, and equipment, buildings, equipment, vehicles, furniture, fixtures, all of those things, or cash that comes in from selling those items. Now, I want to point out that on the cash flow statement, only cash transactions goes there. So let's say that I bought $1 million building and I paid $20,000 down. The only thing that's going to go on the body of this cash flow statement is the $20,000, because the rest that I signed a note for has nothing to do with cash. The third section of the cash flow statement is financing activities. I like to think of this as all the cash that comes in or goes out for anything else. So this is where we put if we sell stock, or if we buy stock back, or if we pay dividends, or if we take out a loan from the bank, or if we repay a loan from the bank. All of those are going to go under cash flows from financing activities. So we're going to take the inflow or the outflow from each one of those categories and add them together to get the change in cash. In this case, we had a net increase in cash of $4,800. If you add the change in cash to the original cash balance at the beginning of the year, you should end up with the new cash balance on your balance sheet. Now, if you're wondering, well, where do I get the cash balance at the beginning of the year? You would get the cash balance from the beginning of the year on the balance sheet from December 31st, 2016. The prior year balance sheet is going to give you the beginning cash balance. So that's the statement of cash flows. So if you look at how they all go together, I thought I eliminated this slide. If you look at how they all go together, the balance sheet feeds into the income statement, net income feeds into the statement of retained earnings. The retained earnings balance feeds into the balance sheet. And then the cash on the statement of cash flows will be the same as the cash on the balance sheet if you've done the statement correctly. Okay, as always, if you have any questions, you're welcome to text me or call me. My phone number is on the course outline and in most of my welcome messages. So happy watching.